This week, we're going to talk about some of the pros and cons of FHA financing, and we're going to start right now. Hi, in this week's video, we're going to look at some of the pros and cons of FHA financing. Now, before we get started, this video is for informational purposes only. I'm not a mortgage professional. I'm not a loan officer. I'm a local realtor here in Omaha, Nebraska. Now, you'd want to seek out a qualified mortgage professional, and you wouldn't want to take any advice off of some guy on YouTube. All right, pro number one, the seller can contribute up to 6% of the purchase price towards the buyer's closing costs, prepaids, and escrows. This could significantly reduce the amount of money a buyer needs to bring to closing, thus saving the buyer a lot of money. All right, pro number two is a low down payment. The minimum down payment for FHA financing is only 3.5%. So that means on a $200,000 house, you only have to have $7,000. Now, the neat thing about FHA is those funds can also be in a form of a gift from a relative. Now, the key thing is it has to be documented properly. So you want to make sure you work with your lender if you're going to get gift funds for a down payment. All right, pro number three is FHA has more lenient credit guidelines. So that means you can come in with a little bit lower credit score and you can have a little bit higher debt to income ratio. So therefore it allows a buyer who maybe has made a few mistakes in the past an opportunity to purchase a home. Okay, pro number four is a person with a higher debt to income ratio may be able to qualify for a higher purchase price compared to a conventional loan. Now, what is a debt to income ratio? A debt to income ratio is your debt divided by your monthly debt divided by your gross monthly income. That'll give you your debt to income ratio. A lot of first-time home buyers have a little bit higher debt to income ratio, and FHA allows those folks in order to purchase a property. All right, pro number five is also going to be on the con list. Pro number five is mortgage insurance. Mortgage insurance for an FHA loan may be lower compared to PMI, which is private mortgage insurance for a conventional loan. And we'll talk about the cons in just a moment. All right, now let's talk about the cons. All right, con number one is the FHA appraisal. Two things are involved here. Number one, the home must appraise for at or above purchase price. And number two is the FHA appraisal is going to also look for health and safety issues. FHA may require the seller to make some repairs before closing. Items such as missing handrails, exposed wiring, or peeling paint are sometimes things that pop up on the FHA appraisal. Okay, con number two is FHA has loan limits. Depending on your location, some higher priced homes may not qualify for FHA financing. I will include a link in the description below so you can input your county and your state to see what the FHA loan limits are in your area. Okay, con number three is a mortgage insurance. Because FHA loans are considered higher risk, FHA has a 1.75% upfront mortgage insurance premium. That's rolled into the financing. FHA also has a monthly mortgage insurance premium, and that's added to your payment. Now, this monthly mortgage insurance premium does not go away. That is for the life of the loan. The best strategy to remove that mortgage insurance premium is after a few years, after you've built up some equity, you want to refinance that to a conventional loan. All right, con number four is in a competitive seller's market like we're in right now, you may lose out if you have FHA financing to cash and conventional buyers. And here's why. For conventional buyers, the buyer only has to worry for the appraisal of the amount of the loan amount. Okay, for FHA financing, remember, you have to worry about appraising at the purchase price. Okay, So if in an offer where a home where a price gets bid up, maybe you're at a $200,000 list price and it's bid up to $210,000. Well, now the seller has to worry about, if they accept your offer for $210,000, it appraising for $210,000. Okay, now here's what you can do, is you can make up the difference in cash. But a lot of buyers, especially first-time home buyers, guess what? They don't have the funds to make up that difference. So that means you're at a competitive disadvantage with FHA financing. All right, con number 5 is, if you're purchasing a condo, you got to make sure that the condo is FHA approved. Okay, and what that means is the condo association has to jump through a few more hoops in order to make sure that condo is available for FHA financing. So if you're interested in a certain condo, before you make that offer, you want to make sure that the condo association is approved for FHA financing. All right, there you have it. Those are the pros and cons of FHA financing. Now be sure to check out my next video, and be sure to subscribe to my channel, give this video a thumbs up, and hey, thanks for watching, and you make it a great day.